What's up, guys? Keith Trades. Today is December 18th, and it was an off day for the members, right? Today's an FOMC day, but I decided to trade myself because usually I do very well in FOMC, and today was no different than that. So coming into FOMC, I always wait for 11 a.m. my time, so I wait for post federal fund rate news release, and then I'll look for a setup. Today I was leaning short. Why was I leaning so short? Because Monday opens and all we've seen on Monday and Tuesday were an uptrend and then consolidation, and we have left this weekly gap up. So my main target was to see the market fill this gap up here. Right, we gapped up. If we get bearish, look, I'm looking for us to fill this imbalance, which we did, and we sold off ridiculous. So if we go in the 1 minute time frame, right, I was looking bearish. Federal fund rate hits, and we see the selling pressure getting aggressively. So I'm waiting for a retracement. And what retracement was I looking for was a 5 minute fair value gap retracement here. Usually, I would wait for what? An inverse fair value gap here or here, and then look for it. But I got in earlier at the 38s. Why did I do so? Because I was confident in my draw. The thing with FOMC is a lot of times if you don't see it fast, it'll leave you behind. So I saw the draw on the 5 minute fair value. I saw that we started to see buyers coming and we started to stall out. Once I seen that we have failed to deliver midpoint of this gap, we have failed to find buying through this bearish fair value gap, and we respected, I decided to size into my position here. My targets, that gap fill from the daily, which is here, a daily low in this gap. That was my target. And then my scale point was this internal low, break even. That was my trade. This was more of an intuition-based trade. Again, guys, here you can see the fills here. I caught 92 points. 30 entry, like I said. 46, I caught a little bit of the break there down here, but it was a 1, 2, 3, 4 minute trade, and I was a small size position, but I still ended up making a very great quality profit at around 450 bucks. But I only took 3 micros, guys. 3 micros only. A $300 investment. But when you catch, you know, the break for 70 points, it was my first scale, which is a $280 profit, and then my last runner I had for 92 bucks, which is a 180. I made $400 profit plus in just these candles here. Again, an intuition-based trade, right? Our true model would look like what? I would look for this inversion here, close below, or this here. But let's look at it. Let's say we get the closure below and you short it. That risk to reward is insane. But I was confident once we saw buyers step in, once we started to stall out and we swept out, and we still rejected the same 1 minute fair value gap, I was confident in sizing it on the turnaround, a little bit of drawdown, and we absolutely shot down. And that's all I did. Right, again, if I left runners, right, break even, I wouldn't have been break even, but it was a small trade. I was looking for one win. I caught that win, and that was it. But man, I did not see this coming. The market absolutely fucking dumped. Right, just a little for fun. From my entry point, 800 point sell off. That's ridiculous. But I'm totally content with catching 92 points. For me, a 20 point trade is a great trade. Caught 92 here. That's totally fine. But this is my profit for the day. This is my setup. Again, the intuition-based trade. Our real setup would be an inverse entry here. Got in earlier because I was confident in the bearish narrative to do what? Fill this weekly gap up. But that's going to be it. A quick recap for December 18th. Thank you guys for watching. Leave a like, leave a comment, subscribe. And if you want to join the Discord, there'll be a link in the bio. Until next time, guys. Peace out.